Roy, thank you very much for your time this afternoon. So tertiary education did very well for the group, and I'm really interested in one of the strategies that you rolled out, the digitally enabled campuses, which you piloted in Polokwane. And talk to us about that and really the impact that it had on the quality of tertiary education for ADvTech.
Yes, we're very excited about that model. It is something that we believe is a very good demonstration of tech-enabled education on a real, viable and scalable platform. It hasn't had that much of an impact in our results to date. It's still relatively new. In fact, Polokwane was our pilot, but it is exciting. And what it enables us to do is to deliver quality education at a significantly lower cost into areas that otherwise probably wouldn't have been able to afford or sustain higher education tertiary models. So we're very excited about that. And what's most important to us is that the quality of the academic results coming out of that blended learning model are very exciting and extremely good and highly comparable with face-to-face tuition and instruction.
Roy, I want to take you back to December 2017 with that fraud case. We're looking over 40 million rand. And who's to say, what tools have you actually put in play to make sure that this doesn't play back, and also to reassure investors out there?
Yeah, undoubtedly, very unfortunate incident for us, and we have worked extremely hard to make sure that there is no repeat occurrence of that. Ironically, in fact, the discovery of that fraud, which had been perpetrated over a 3-year period, was discovered as a result of a lot of the restructurings that we're putting into place to make the schools division more efficient and more effective. You'll appreciate ADvTech Schools business has come about not only through strong organic growth, but through a number of acquisitions too. And that left us with a situation with a plethora of legacy systems, different structures and processes. And when your chain is long, you're only as strong as the weakest link, and the opportunity for weaknesses is obviously greater. So we've been spending time restructuring the division, in fact making them much more market focused and providing the correct operational resources at a brand level, whilst at the same time actually consolidating transaction processing, financial systems, which doesn't necessarily have a meaningful impact at the operator level, but obviously can be done in a much more efficient, effective and tighter control system when it's centralized and consolidated on single platforms. So that's where our focus is, and we've worked hard to make sure that we've understood what happened and to work at not repeating it. So that's important for us, and it was an unfortunate incident in the 2017 year.
And just a final note on the fraud case, what will be happening to that financial manager who was implicated?
He has left the business, and we are vigorously pursuing criminal charges. We have been able to work together with the prosecuting teams. It was over a 2-territory period. In fact, it included Botswana and South Africa. And we will press charges right to the hilt and to make sure that it's dealt with appropriately through the criminal structures.
Now, market analysts have said that ADvTech, unlike other players in your space, has created a lovely balance between tertiary education and also the schools division of the company. But seeing that tertiary education is something that is growing in demand, are you going to be, you spoke about acquisitions and investments, is this a space that you're wanting to invest more in, just seeing that growing demand that we're seeing?
We are actually really bullish about both sectors, about both schools and tertiary. We see opportunities in the education sector as a whole. So we're not prioritizing one element over the other. For us, of course, it's about all of the opportunities that are available to us and making sure we select the correct ones. We're in that enviable position, I should say, of saying that we have a lot of projects that we can consider, and what we have to do is to apply our minds and make sure we're investing in the right ones and prioritizing correctly. But we see opportunities across both tertiary and also in the schooling division. There's a great deal of demand out there. I think the issues are really affordability, value propositions, and meeting the consumer's expectations for quality education at affordable pricing. That's really the challenge. The demand is given. We're a young population. There's an urgent need for better education, quality education. The trick is finding the right models to be able to provide it affordably to customers.
Overall, we're seeing a dividend declared of close to 35 cents. Now, with the turbulence that 2017 held, in my very meager understanding, I would have thought maybe with the one-off payments and maybe all the settlements, a dividend could be maybe let off for at least this financial year. What's the rationale here?
Well, I think it's a very good question in a sense, and as a board and as a management team within ADvTech, we actually give careful consideration to our dividend policy. It's affected by the fact that we see a number of projects in the future, and we're trying to steer a narrow path between the conservation of cash to invest in those projects and yet rewarding shareholders who, of course, we have paid dividends, and we do have a number of people who are dependent upon those dividend flows. So we have signaled to the market that we're increasing the dividend cover, and it's a careful balance between preserving cash and yet rewarding and returning funds to shareholders, because there is an expectation that we would do so.
Roy, I want to take you back to what you said earlier about implementing the right models. Now, a misconception about private education, higher education, is that it's relatively more expensive than what you'd be getting at a public institution. How has ADvTech been able to create a model where they can contain the cost for your customers as well as get returns for shareholders?
Again, an extremely good question. And yes, we are very conscious of the fact that for us to have a sustainable business model going forward, we have to be able to have a value proposition which is meaningful to consumers. So we've spent a lot of effort in terms of examining our models. I think central to that is our centralized, consolidated academic body, which is the Independent Institute of Education, which we house a number of academics, over 100 academics. It does our curriculum development, it does our quality assurance and controls, it does lecture development, and we centralize that function whilst actually providing support to our operating campuses, which are campuses of the Independent Institute of Education. So we've spent a lot of time looking at that model, perfecting it. We are able to offer a very competitive tertiary quality education, which is highly comparable to the cost of publics, particularly when one takes into account the fact that the public institutions are subsidized. Every student attending a public institution, not only the fees that are paid, but there is a subsidization from government. And of course, we don't benefit from that at all. So our models have to be effective. We have to be a real value proposition for our students.
I think the fact that you're not subsidized at all leads me to my next question, because looking at your financials here, your capital expenditure for the current year is close to 718. That almost doubled from the 361.8 in 2016. Now, there are no subsidies. You're spending a lot, at least capital-wise. When do I get worried as an investor?
I think our balance sheet is well structured and we're well within the covenants and the covers, etc. We're very mindful of that, in a sense, is that we are an education institution and the sustainability of our business model is really important. I think what you need to look at is the very strong cash flow, cash generation that we have in the business. And of course, as these models are brought to fruition and they come to market, our cash increases, and we're very comfortable with the cover that we have in an EBITDA to our borrowings level. Although obviously we have spent a lot on capex and we continue to do so as we see these opportunities in front. But our strong cash generation and our structure of our balance sheet, I think we're comfortable that we're actually steering again that balance between leverage and where in fact we would start to be perhaps a little worried about the level of debt in our business. But that's not the case at the moment. We're very well covered, and it's something we're mindful of and keep a sharp eye on.